Good afternoon, guys. I hope you are well, and I also hope that your test preparations are coming all right. Remember, we're writing on Tuesday, right? What time? 5:30, right? Do you guys know your venues? If you don't, please go through the scope document. Everything is there. And then there's also a consultation lecture on Monday, right? You guys know about that, right? So if you have questions on Monday, then come to the consultation lecture. I think it's best to come to the consultation lecture because most lecturers won't be available for one-on-one consultations, since there'll already be a spot or a slot for consultations during the lecture times, right? So if you have questions, come to those. And then with regards to today's lecture, we are doing Cloud Limited's, Cloud Learning as taxable income. So like I always say, guys, the first thing you should always do in a question, you should always take note of the time and marks available for you to do the question. On Tuesday, please stick to the time limits. If it says 40 minutes, move on to the next one, because you won't pass if you attempt 20 marks out of 80 marks and you manage to get all those 20 marks by a miracle, I'm sure, because it's very, very close to nearly impossible to total a question in university. So widen the net, cast a wide net by attempting all questions and then pick up the easy marks in all the questions. I'm sure even if you don't know, even if you don't know gross income, for example, but I'm sure there are easy marks you can pick up in gross income. Like, for example, total amount. Then you just take the total amount in the question. One easy mark instead of just not attempting the whole question. But with regard to this question, after you've taken note of the time and mark allocation, you then essentially give yourself purpose by reading the required. In this question, we are required to calculate the taxable income or assessed loss of Cloud Learning Pty Ltd for the year of assessment ended on 31 March 2023, right? One thing what's the main difference there in terms of the normal requires we've been having? Is this like business as usual? Is there something a little bit unusual about this required? Or it's business as usual? Okay, guys. The main difference here is that you are dealing with a company, instead of a warm-blooded individual or a natural person. And then when you are dealing with this then gives you a different period usually. For this company, you'll see their year of assessment ends on 31 March 2023. But so far, you've been used to years of assessment ending on 28 or 29 February of that relative year for 2023, 28 February 2023, right? So for this one, it's a little bit different. So I'd advise you to please, whenever you're dealing with a company, you may just write like the period you're dealing with. For in this case, it's 1 April 2022 to 31 March 2023. Then you are only concerned with transactions which took place between these dates, right? So that you don't forget. And then we are told that we should provide reasons for nil effects. Please note, they say reasons for nil effects. So if you included an amount in a column, then that's not a nil effect because it's not zero. So only reasons for nil effects, that is amounts not taken into consideration, and then they tell us show all the calculations and considerations. Okay, how we'll do it is the same way we usually do it. I'll read an item, and if it has tax implications, we'll quickly do its tax implications and then move on to the next item. So we are told you are a tax consultant at Avenge Tax Consultants Pty Ltd. One of your clients is Cloud Learning Pty Ltd, a South African resident. Is this relevant, guys? Yes, because in terms of gross income, since they are a resident, worldwide income, if they were non-resident, then they would only get taxed on receipts within a source in South Africa. So Cloud Learning Pty Ltd is a South African resident company, and they specialize in providing online learning content to students. Like I always say, guys, it's very, very important to know the business your client is in. It makes it easier for you to spot things like, okay, what is capital to them and what is revenue to them. For in this instance, since they specialize in providing online learning equipment, so you may guess that their computers are capital, right? And for instance, a revenue item would be what? Salaries paid to, well, it's not really like a non-capital item would be salaries paid to the staff and things like that. But this helps you formulate, like, understand the environment in which they operate, and then you can easily identify the tax implications of transactions they get into. And then they tell us that content includes videos, podcasts, and interactive materials. And as we've noted, that Cloud has a 31 March financial year end. Cloud employs academic professionals, lecturers, on an ad hoc basis, meaning whenever they are needed, who assist in the preparation of online content in their spare time. Full-time employees comprise IT specialists who manage the online learning platform. This really doesn't have tax implications at this point in time, right? So you don't waste time like highlighting everything in the question, because you only want to highlight what's relevant to you. And then they tell us that Cloud has its own studio. So Cloud owns a studio in which it records content and podcast sessions to upload onto the online learning environment. So they record content here. This studio is a second-hand building. Is that important? For what? If you think it's important. Don't be shy, guys. Guys, this is the only space, including your room. This space is, yes, sir. Yes, for capital allowances, building allowances. Is this a manufacturing building, or is this a commercial building, or is this a residential building? It's commercial, right? Yes, I agree with you guys. Just need to go over something quick. I got this yesterday while I was attending one of the lectures. But the main thing I wanted here was what SARS regards as manufacturing. You don't have to download this document. It's not even on ClickUp, I believe. So you don't need to stress that you don't have this document. But here, I think what's important here is what they actually mean by manufacture. So they define things like wholly or mainly used, but Silk, I think, defines this as well. Yeah, so this is what SARS regards as a process of manufacture. They tell us that a process of manufacture covers those cases in which raw materials, so physical things, guys, raw materials are converted into a product suitable for use. According to case law, it must be a complete process, and it must produce an object or thing essentially different from the materials, meaning from the raw materials which went into its making. You understand? That's very clear, right? You manufacture a physical product. So when they are producing content, that is not regarded as a process of manufacture. So the building, like you've correctly stated, it's a commercial building. Also, it's not a residential building because they're not staying there and, raising families and stuff. But yeah, and we are told that this building was purchased for 580,000 rands, and it was purchased on 20 January 2017, and it was brought into use immediately. Again, as Ms. Mulebal was essentially noted in class, in tax, you only start calculating allowances when an asset is brought into use. In accounting, it's when an asset is available for use, right? But for tax, it's when it's actually brought into use, meaning when it starts producing income for the business. So for this building, is there an allowance? Should we claim an allowance, guys, for this building? What do you guys think? Guys, what do you guys think? What's the allowance for the studio? 5% of the cost? Yeah? Okay, no, guys, it is not. Remember, for commercial buildings, you must own them, first of all, so they do own the studio. Second thing, you must use them in your trade, they do use them in their trade to produce content. Also, it must be bought new and unused, meaning you must be the first one to use it. Do you guys agree? In this case, this is a second-hand building. They brought it second-hand building, right? This studio is a second-hand building, so meaning they do not qualify for Section 13 Queen. And remember, they told us that whenever there's an ill effect, you include 0. Wait. Okay, cool. So do you guys agree with me that that's 0, right? Okay, cool. We are told the senior tax consultant has provided you with the following information for Cloud's year of assessment that ended on 31 March 2023. So the year of assessment we're dealing with. Then we are told that these are operating in other income. We have cash fees, credit fees, because this is a school, so the customers pay fees. Dividends received on investments on local shares of 250,000 rands, and then we have interest received on a local fixed deposit of 42,000 rands. That's all gross income, right? At least you should know that by now. And you don't waste time. You just add. But a question. Do we include... okay, I hate it when it does this. Do we include the full credit fees? Or how much of the credit fees do we include? Hey guys, you guys today you are very silent.
It's for this year of assessment or whether it is for next year of assessment.
So you want to know which period the credit fees relate to?
Yes.
Okay, so in the scenario we are told, remember that the senior tax consultant has provided you with information for the year ended 31 March 2023. So for the current year. So they relate to the current period. And remember, for gross income, we included earlier off receipt or accrual. And then for credit fees, we have not received them, but they've accrued to us. Do you guys agree? Because the students now owe Cloud the money. So you include them in the current year. Thanks for your response. Okay, credit fees, 700,000. And the local dividends, right, we include them, right? The 250,000 rands. Local interest, it's 42,000 rands, right? And then, which of these is exempt? Are the cash fees exempt? No, right? Are the credit fees exempt? No, right? The local dividends, are they exempt? Yes, I agree. So we copy it, then we come exempt. And then I please advise you guys to do it this way, so that you don't forget. As soon as you write something in gross income, you ask yourself quickly, is it exempt or not? Is the local interest exempt? Yes, right? But now the question is, do we take 34,500 rands or do we take 23,800? And that question, we can only answer it by identifying the company's age. How old is this company, guys? I'm joking. So remember, guys, we're only exempt for natural persons, right? Yes, because only well, you can say a company has been operating for so many years, but that's not its age, you know. It can change its years and change its identity. I don't know if you've ever noticed that companies that get into scandals, soon after they rebrand themselves and they come out as a new thing. So the local interest is not exempt. Yes. Yes. That's the reason. I'll write it now. So it's like he said, it's a juristic person or legal person, whichever reason you want to give. So it's not exempt. Okay, and then we come to operating expenses incurred during the year include salaries to lecturers and salaries to the IT staff. Guys, that's 11A. They're carrying on a trade. It's an expense. It's in the production of income. It's actually incurred because it's actually been paid. during the year of assessment, like you've been told, it's not of a capital nature, cause if you don't pay the lecturers and if you don't pay the IT staff, guess what? Next month they are gone. So there's no enduring benefit, right? And it's a recurring payment. These are monthly payments. So quickly for salaries, you just don't argue there. You deduct them. It's 750,000 rands just to save time. 340 plus, well, I think it's 350 plus 400,000. Let me just quickly check. Yeah. 350,000 plus 400,000. And then for the holiday trip, the holiday trip is the value of 20,000 rands. It's for the CEO's family. And then we are told that this payment was not made, so it was not made as a result of a stipulation in the CEO's contract. So do we deduct that holiday trip? Why not?
It's not involved in the production of income.
Yes, it's not laid out for the purposes of trade, or it's not in the production of income. Right, 0, and then we move on very quickly. And whenever you have a question, guys, just please raise your hand and then we can address it. Like I said, this is a very safe space. Yes, sir.
So are we allowed to just use a dash, or should we say 0 when no amounts?
No, man. You can use a dash, you can use a 0, but I think a dash is safer than a 0, right? Well, it's not like a marker would sabotage you and add 1 next to your 0, but yeah.
One lecture somewhere said, don't use a dash, use a 0, so I can't remember where that came.
Nah, we're not that strict. As long as I can see there's no amount included, 0, but at least write something. Let me just put it that way. Write something, don't just leave it blank. You can write a dash or you can write a 0, whichever you prefer, and then you'll get the mark. And obviously your reason will tell us what your thoughts were, right? Okay, and then we are told that on 31 May 2022, Cloud entered into a lease agreement with ATK P2I Ltd to lease an administrative building, right? So they're leasing an admin building from 1 June 2022, and it's for 15 years. The IT staff will manage the online learning environment from this building. What that statement tells you is this building is used in the production of income, right? Or it's used in the trade. And guys must get into that habit. The more, obviously, when you know your theory, the more questions you practice, you'll realize that certain sentences trigger certain theoretical provisions, right? It'll become easy for you to identify those things. We're told that the monthly rental is 15,000 rands, and it was paid in advance. And they tell us that on the first day of the relevant month, Cloud adhered to this arrangement. So, quickly, we have rent expense. Do you guys agree? Because they are leasing a building from 1 June 2022, and that's in the current year of assessment. And for that rent expense, we didn't rent the building we didn't rent it in April, and we also did not rent it in May. We only started renting it in June until the end of the year of assessment. So we rented it for 10 months. Do you guys agree? And that's the deduction, right? 15,000 rands times 10 minus 150, and then we are then told that part of the lease agreement requires Cloud to effect improvements. So they have to effect improvements to the property to the value of 100,000 rands. So that's the contracted amount. And then we are told Cloud incurred a cost of 120,000 rands. Right, to effect the improvements. The improvements were completed on 31 July 2022. And were brought into use, very important statement, were brought into use the next day, meaning 1 August 2022. Okay guys, this is how you tackle a scenario like this. For improvements for the lessor, well, for the lessee, because we are the lessee in this case, right? We are leasing the building. We're required to effect improvements. If we spent under the contracted amount, you use the amount spent, which is less than the contracted amount. So in this case, it would be any amount less than 100,000. If we spent the contracted amount, no question, you take the 100,000. If you spend more than the contracted amount, which is the case here, we spend 120,000 rands, but we're only required to spend only 100,000 rands, you take the contracted amount. Do you guys agree? But if you were the lessor, if you are the lessor, if the lessee spends less than the contracted amount, you take the contracted amount. If the lessor spends, well, if the lessee spends more than the contracted amount, you still take the contracted amount. And then that would be paragraph H, leasehold improvements, especially inclusion into gross income. Do you guys agree? Okay, cool. And then you divide, I advise you guys to use months, right? You divide the amount you're going to use, in this case the contracted amount, you divide it by the time left in the lease, not the total lease period, the time left in the lease of which you're going to use these improvements for. You understand? I advise you use months because usually your scenarios will always be in months. In this case, we started the lease on 1 June 2022, but the improvements were only brought into use on 1 August 2022. Right, so that's when we started using the lease, right? 1 August 2022. So you would agree with me, 2 months had elapsed from the time we started leasing to the time we started using the improvements, right? And then this is how it looks when you do your calculation. Leasehold improvements. Your calc says 100,000, which in this case is the lesser amount, because you always take the lesser of the contracted amount or the actual amount spent. If it's more, then you ignore the amount which was spent. You divide this by the time left in the lease when the improvements were completed. In this case, what was left was 15 years times 12, which is the total lease period in months. And you deduct the 2 months which had elapsed from the time the lease began to the time we started using the improvements. And then with that, you multiply it by the number of months in the current year of assessment that we used the improvements for, which would then be August, September, October, November, December, January, February, March, 8 months, right? And then Bob's your uncle. That's the answer. So it's not that complicated, guys. $15 by 12 plus 2 times 8. And that's the leasehold improvements deduction for the current year of assessment. Any questions? Okay, cool. And then we are told Cloud incurred the following expenses during the year. We are told they incurred insurance for the studio equipment from 1 August 2022 to 30 June 2023. Okay guys, this is why I was saying, please, whenever you are told we are dealing with a company, it's always wise to write that my period is 1 April 2022 in this case to 31 March 2023, right? So that you know that, okay, when you are dealing with this transaction, there's a prepaid portion in this transaction because they didn't stop paying they didn't stop at 31 March 2023. They paid for April 2023, May 2023, and June 2023. Do you guys understand? Okay, for prepaid expenditure, which is section 23 cap H, it's very, very simple, very, very simple. You ask yourself one question. A, are the benefits received within 6 months? In this case, are the benefits received within 6 months? Or did they pay up until 6 months for the next year of assessment? Yes or no, guys? Yes, right? April, May, June. So you don't argue, you quickly go to your scenario and then you deduct because you've met one of the requirements. Section 23 cap H is an or test, meaning you don't have to meet all the requirements, you only have to meet one of the requirements. Right? We deduct the 150,000 rands. I advise you guys to do it like this. And then secondly, where am I? Secondly, well, let me just write them here actually, now that I'm in writing mode. The second one is B. You ask yourself, is it required by legislation? Right? Or C. C is a little bit different, and I advise you guys to do it in this order. C, you ask yourself, for transactions not meeting A or B, does total is the total at least 100,000 rands. Right. So for C, you only apply C to transactions which did not meet A or B. And like I said, it's an or test. Put that there, or right. You apply C for transactions which did not meet A or B. So if a transaction met B or it met A, for example, the insurance meets A, therefore you don't consider it when you're dealing with C. For example, now the trading license. We are told that the trading license, in terms of the SA Trade and Industry Act, we are told that they paid an amount of 120,000 rands to obtain the license for the 2024 financial year. I'll ask you this. If they paid for the full 2024 financial year, are the benefits received within 6 months? No, right? No, right? Because it's a 12-month period. So it extends beyond 6 months into the next year of assessment, which is the 2024 financial year. Then you ask yourself, is this amount required by legislation? We won't tell you that it's required by legislation. We'll just tell you that it's required by, well, you'll be lucky if we tell you it's required by legislation. Then that's a giveaway. But in this case, we tell you that it's required by the SA Trade and Industry Act, which is law or legislation. So does it meet B now? It does, right? Because it's required by legislation. Again, don't waste time. You just go there and end marks. Minus 120,000. Right. And then, is there load shedding today? What time? 2. Yo, guys, okay. Oh, it's about to get bumpy. And then we have water and electricity. It was paid from 1 June 2022 to 31 December 2023, right? And then it's 250,000 rands. And then you are told that assume that the water and electricity is the same every month, meaning you can divide it by the number of months it was paid for. Right. In this case, you ask yourself, are the benefits received within 6 months after the end of the year of assessment? The answer is no, right? Because the year ends on 31 March 2023. So April, May, June, July, August, September, October, November, December. That's 9 months. So you don't meet A. Is it required by legislation? No, because we did not explicitly tell you that. Guys, please don't get too creative there and say, I assume that water and electricity is required by legislation because my mom told me so, or whoever told you so. Right? If we don't explicitly tell you, then it's not required by legislation. Then the third thing now, you are now in this area, you are now in C, right? You have to determine now the total. In this case, it's just one transaction. But in different cases, you may have 10,000, 20,000, and 50,000, and maybe 40,000. Then you have to determine, does the sum, meaning you don't consider them individually, you consider the sum of all the prepayments that did not meet A and B, or A or B. Does the sum, well, it's A and B. Is the sum at least 100,000? Meaning if it's 100,000 or above, you don't deduct. But if it's less than 100,000, then you deduct. Okay. So for the water and electricity, we first say, okay, let's do it this way. For the current year, guys, the current year portion is not in dispute, so you deduct it, right? And the current year portion is 250,000 multiplied by, they started paying for June 2022, right? So meaning in the current year, they didn't pay for April, they didn't pay for May, but they paid from June up until 31 March 2023, so 10 months. And then how many months did they pay for? So if you count from March, it's April, May, June, July, August, September, October, November, December, 9 months plus the 10 months in the current year. So that gives you a total of 19 months. And then you deduct that. That's 131,579. And then That's load shedding, right? Yeah, okay. Yo, yeah, this is gonna become weird now. And then, okay, at least, let me just try to switch it back on, but it takes time, yeah? Okay, please work with me, guys. How much is the prepaid portion for next year? Remember, they paid for 9 months in the next year of assessment, so it's 250,000 rands multiplied by 9 divided by 19. And then once you get that total, you ask yourself, is it at least 100,000? Is it, guys? It is, right? I think it's 118421. I've been doing this for so long, I remember the amounts now. It's 118421, right? And it's more than 100,000. What that means is you do not deduct it this year. It will only be deducted in the following year of assessment. If the answer was, let's say, 70,000, then you would deduct the full amount in the current year of assessment. Yeah, guys, prayers for the project. Where are my prayer warriors? Yo, okay. Sure, okay. Okay, do you guys, you have the question in front of you, right? So at least we can follow each other so long. So we are told there that included in the credit fees, meaning the credit sales, is 30,000 rands on which students defaulted during the 2023 financial year on the payment of online content fees. So what this means is there are people who lent for free. They first got into debt with the company and then they couldn't honor their agreement to pay the company at a later stage. So what do we do? Do we deduct it as bad debts? Yes, right? And I want you to notice this. Notice how you cannot see where I'm at. Okay. But notice how the question emphasizes that this amount is part of the credit fees which we included in gross income. And you notice that if, let's say, for example, an amount was not included in gross income, say you make a loan to your mother, and she says, dude, I've been carrying you all my life. I'm not paying you back, right? You cannot claim that amount as a deduction, right? Because it was never included in your gross income in the first place, right? Please take note of that. Tax is, it's not weird, but that's how it operates. If an amount is not included in gross income, in fact, if an amount is not included in income, then it's not deductible. For example, for local dividends, let's say you purchase shares, right? And it costs you 20,000 rands. You are a big baller. Costs you 20,000 rands for the market to absorb that transaction, right? Or for investment advice. Costs you 20,000 rands, and then you get, let's say, 100,000 rands in local dividends. You'd include 100,000 rands as gross income, right? And then you'd quickly exempt it, right? So meaning your income is zero. My question to you is this: what happens to the 20,000 rands, which was the cost to actually purchase the shares, which produced the dividends? Yeah, you cannot deduct it. It's limited to zero, meaning if no income, no deduction. Yeah, guys, I don't know. Oh, at least, thank you for the prayers. Okay. I think at this point to do it like this. Okay, let's wait for it. I think I'm going to start recording on Wednesdays. Because usually I don't get load shedding around that time. But I've noticed like the time changes, because last week there was no load shedding and it was fine. But this week there is, so yeah, go figure. Come on. It says no signal. Wow. But it's projecting that, okay. Okay, I don't know why it's not picking up my laptop. And I don't have a VGA to HDMI converter with me, so maybe. Yeah. I think maybe let me try switching it off and then back on again. Yo, okay guys, this is gonna get weird, but I think let's continue in the interest of time because there's like only 10 minutes left. So we are told there that also included in the credit fees are amounts to the value of 25,000 rands relating to a list of doubtful student fees in the current financial year. And then we are told again that the list of doubtful student fees at the end of 2022 financial year amounted to 15,000 rands. And then they tell us that the commissioner allows the maximum percentage when calculating the allowance. So guys, I'll ask you this. When you write someone, when you have doubt, does it mean something has happened or you just doubt the likelihood of it happening or the probability of it happening, right? So doubtful student fees means you have students that you like, you know what, I don't think they will all pay, you know. You don't think out of the, I don't know, I think it was 300,000, I forgot how much was credit fees. Out of the 700,000 in credit fees, you suspect that this year you won't receive 25,000 rands. So it's not an actual expense, do you guys agree? But SARS allows you to deduct it. What this means is this. If you deduct it this year, since it's not an actual expense, you must add it back the next year, right? And then deduct your new estimate for next year when you are doing next year's book. In other words, meaning the 15,000 rands from last year, it was a deduction last year. So in the current year, we add it back, right? And then we deduct the 25,000 rands, which is this year's estimate. Yeah, okay, let's hope you guys switching on. Yes, ma'am.
So would it be wrong to just deduct the difference, or should we show the adding back and then subtracting?
Please show the adding back and subtracting, please, so that we can give you full marks. What if the difference is 10,000 rands and for some reason you write 1,000? You understand? So it's better when you just show it. So for doubtful debts or doubtful student fees, you're finally back in business. Okay, guys, let's move. So for the 2022 one, remember the 2022 one was deducted last year, so you add it back this year. And then the current year's amount, this now is your new 25,000, new deduction. And like she said, please show it separately, right? Yeah, and I think that's about it. But we are behind. Okay, and remember, like I said, for a bad debt, usually you'll have two types: bad debts from customers and bad debts from an employee. The bad debt from an employee was never income anyway, because it was never part of sales. So whenever you get a bad debt from an employee, because you loan them an amount, zero. You deduct zero because income is zero. But for the one for sales, you deduct the full amount for bad debts, right? And then let's quickly move on. We are told that during November 2022, again, these dates that just nudge you forward, saying this happened within the current year of assessment. Cloud held a Black Friday sale for students where online content could be purchased at significant discounts. Due to the high volume of students using the online learning environment, the platform crashed. And then we are told repairs of 20,000 rands were incurred to restore the platform to its normal operating condition. Right, so what this tells you is this is not an improvement. When something is restored to its normal condition, it's not an improvement. And then section 11D, or repairs, you just deduct the full amount. Okay, and then we are told that Cloud has a balance of assessed loss of 850,624 rands from the previous year of assessment. Again, guys, you don't argue with that. You just say assessed loss or previous year's assessed loss, and you deduct that amount. Right. And then we are told that Cloud owns the following assets. A new VW Polo was donated to Cloud on 1 April 2022. It cost the donor 170,000 rands, but its market value when he donated it, or when she donated it to us, was 100,000 rands, and they are using it for trade purposes. And then we are told that the VW Polo was only brought into use on 1 August 2022. So there, you agree with me, this is a movable asset, right? So, and it's used for trade. So section 11E, right? Or wear and tear allowance. And then we are told that the allowance, SARS assumes, SARS allows the following write-off period as contained in interpretation note 47, and passenger cars, a VW Polo is a passenger car, you must write it off over 5 years. So there again, you just take your Polo. One question, do we use the cost or the market value on date of donation, or zero since we did not buy it? Hey guys. Yeah? The market value, guys. Whenever an asset is donated, you use the market value. And then this is your calculation. It's 100,000 rands, right? You divide the 100,000 rands by the 5 years. And then you get an answer which is X, well, Y. And you multiply Y by, we didn't use it for April, May, June, and July. So we only used it for 2/3 of the year, which is 8 months, over 12. And then what's the answer you get, guys? 13,333, right? Okay, cool. And then we quickly move on. Cloud owns 7 townhouses. These townhouses are in Pretoria. It lets them out too, so they are let out. Some of the full-time IT staff. The townhouses were purchased directly from the developer, so they were purchased directly from the developer. What does that mean, guys? New and unused, right? And they cost 7,000 rands each on 1 August 2021, so not in the current year of assessment. We are told that the monthly market-related rental amounts to 5,000 rands per townhouse. And then we are told that all 7 townhouses were rented out for the entire financial year. So again there, no arguments. You just come and you record your rent income. And your rent income is the 5,000 rands you received for 7 townhouses for 12 months in the year. Gives you 420,000 rands. And then now, do you qualify for the building allowance? Yes, because it says at least 5 units, right? And you have 7 units. But those units must all be in South Africa and then in Pretoria, which I believe we're in South Africa, right? And then they own them, and then they are letting them out, so they are using them for trade, right? All 7 of them. And then what's the last requirement? Well, they do not qualify for the additional 5%, right? Because 700,000 is both and more than 350,000 rands, which I believe is for an apartment, and then 300,000 rands, which is for a standalone unit, right? So you don't qualify for the additional 5%. So you would just then now calculate your allowance as follow. It would be the 700,000 rands for 7 townhouses, which you must claim an allowance of 5% in the current year of assessment. Any questions, guys? Yes, ma'am. No, it's you just deduct it. You'll see why it makes sense. Let me actually calculate, because we are done. Let me see. Yes, we are done. Let's calculate whether or not Cloud has taxable income or an assessed loss during the current year of assessment. So their amount, is this an assessed loss or a taxable income? It's an assessed loss, right? And then they can just carry this amount to the next year of assessment. Any questions, guys? Concerns? Okay, if nothing, then please sign the register, guys, and thanks a lot for attending and for your patience during the load shedding episode. Yeah. And then if you don't have a device, please come to me. Hello.
Quick question.
Yes,
regarding the naming of the things, like for instance, when we calculate capital allowance, would it be wrong if I write capital allowance instead of saying like, what did we write it as? I think we wrote it as, we wrote the name of the car. So if I said capital allowance there, would it be wrong?
But just specify for which asset.
Oh,
So maybe say capital allowance VW Polo, but didn't I? You can just write VW Polo, and then you just,
okay.
I don't know if I'm making sense.
Yeah.
Because if you just write capital allowance, and you just put amounts next to it, then the marker would struggle to say, okay. And then you write another one, capital allowance maybe 2.
Okay.
Then you're like, okay, which one is 1, which one is 2, you know? Yeah. Hello, guys. Whew.